Only the expenditures which are incurred up to the port, those expenditures should be added back to the cost of the goods. So to compute IGST, what are the components you are supposed to consider? You are supposed to consider assessable value plus basic custom duty plus social welfare surcharge. Whenever you are considering the exchange rate, you are supposed to consider the exchange rate which is given by the board. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this new session on unit number 6, session 3, that is Customs Act 1962. In the earlier session, we discussed about what is Customs Act and what exactly it means, and we also discussed about what is ad valorem duty and specific duty and the prohibitions under the Customs Act. And we also solved a few problems on computation of assessable value. So in the last session itself, I have explained you about how to compute the assessable value as well as how to compute the custom duty payable. So in this session, firstly, I will be explaining you once again about the format for computation of assessable value as well as format for computation of custom duty payable. Then we will move on to solving the problems based on the assessable value and customs duty payable. So format for computation of assessable value. So $1 equals rupees. So $1 or €1, okay, whatever the foreign currency they'll give. For that foreign currency, they will be mentioning the rupee value. For example, £1 equals 90 rupees or $1 equals 80 rupees. Like that, they'll be giving. So $1 equals 80 rupees. In that way, we are supposed to solve the problem. So particulates, foreign currency, Indian currency. So while you're importing the machinery from other country, then you're supposed to pay them in their currency. Their currency is called what? For us, it's a foreign currency. Indian currency is nothing but our rupee. That is Indian currency. So cost of the goods. First, always you're supposed to take the cost of the goods. So cost of the goods in foreign currencies. Whatever the amount you paid to them as the cost of the goods in their currency, that you're supposed to write here in foreign currency into, if you multiply it into rupees, like 80 rupees, 70 rupees, 90 rupees, whatever the value they'll give. So you'll get the Indian currency value. So cost of goods, first you're supposed to take. Then for that, you're supposed to add packing charges, commission paid to broker, design and development charges, technical fees, materials supplied by the importer. So any kind of expenditure incurred along with the cost of the goods, that should be added to the cost of the goods, except the expenditure incurred in India. For example, transportation cost paid from port to factory or insurance charges paid from port to factory. Like that they'll give. So any expenditure incurred in India, that should not be considered as an expenditure and you're not supposed to add it to the cost of the goods. So only the expenditures which are incurred up to the port, those expenditures should be added back to the cost of the goods. So add those items, you'll get some total here, you'll get the values. So you'll get all the values, okay. So then total all these values. If you total all these values, then you'll get some total, okay. So this total is called what? FOB value. The total is called FOB value. So for FOB value, add transportation charges. See, if the transportation charges is given, in the problem, then need not to worry, whatever the amount is given, we will be considering the given amount. In case, if the transportation charge is not given, sometimes he'll give the transportation charges in the way like transportation charges from port to factory, he'll give in that way. So if the transportation charges is paid from port to factory, it is happening in India after importing the machinery to the port. So that should not be considered. Only the transportation charges paid up to the port, that is supposed to be considered. So if the transportation charges is given, you are supposed to consider the given amount. If the transportation charges is not given, then you are supposed to take 20% of FOB value. You are supposed to take 20% of FOB value as transportation charges. Next, insurance value. See, insurance value is given in the problem like $800 or 100 pounds or 200 euros like that. Then you'll be considering the given insurance value. In case if the insurance value is not given, we are supposed to take it compulsorily. We are supposed to take it compulsorily. Like we are supposed to consider 1.125% of FOB value. Again, we are supposed to consider 1.125% of FOB value as insurance value. Then add these two items. Add these two items, that is transportation and insurance with FOB value. Some total you will get. This total is called assessable value. The total is called what? Assessable value. And you'll also get the total in Indian rupees. So while you're computing the custom duty payable, you'll be computing the custom duty on Indian rupee value, not on foreign currency value. You'll be computing the custom duty payable on Indian currency value. So moving to know the format for computation of custom duty payable, particulars, amount. You're supposed to make 3 columns. Very easy. First thing, basic customs duty. You'll be computing a basic custom duty on the assessable value. So whatever the assessable value you find out here, on this value, you're supposed to compute the basic customs duty. So assessable value into the basic custom duty rate, you'll get the value. Next, social and welfare surcharge. A social and welfare surcharge is supposed to be calculated on this value. Social and welfare surcharge supposed to be calculated on basic custom duty. So what is the rate of tax? It is 10% constant. So there will be no change in social welfare surcharge. It's constant, that is 10%. Next one, IGST, so that is integrated goods and services tax. So on what will compute the IGST? So what are the components to compute the IGST? The components are assessable value, basic custom duty and social welfare surcharge. These 3 items into rate of IGST. Then you'll get the value. Next one, compensation cess. So compensation cess, anti-dumping duty or safeguard duty, whatever the kind of duty it is, you're supposed to compute on the assessable value. For example, compensation cess will give 20%. So 20% on assessable value. Safeguard duty will give 20%. 20% on assessable value. Anti-dumping duty, 20% on assessable value. So these are all the components to compute the different types of taxes under customs duty. So if you find out all those taxes payable, if you total it, you'll get the grand total. The grand total is called what? Customs duty payable. So I hope you understood the format. Moving on to solve the problems. The first problem, from the following information, compute assessable value and customs duty payable. So the first point, cost of machine 30,000 pounds, packing charges 1,500 pounds, commission paid 1,200 pounds, technical fees 1,000 pounds, freight charges from port to factory. So we are not supposed to consider this because it is happening in India, port to factory. Insurance 800 pounds. Next, basic custom duty 10%, social welfare surcharge 10%, IGST 18%, anti-dumping duty 20%. So exchange rate notified by the board 100 rupees per pound and exchange rate notified by RBI 105 rupees per pound. So always you are supposed to consider the exchange rate notified by the board. The exchange rate notified by the board. So you have to keep in mind that whenever you are considering the exchange rate, you are supposed to consider the exchange rate which is given by the board, which is notified by the board. So now we are supposed to consider 100 rupees per pound. Okay. So we are not supposed to add this point. Which one? Freight charges from port to factory. So first we will be considering the cost of machine. Then we will be adding this packing charges plus commission plus technical fee. We will be adding these 3 items. We are going to get the FOB value. Then we will be adding the transportation cost and insurance cost. But in this problem we can see transportation cost is not given. Here it is given. But this transportation charges is occurred in India. We will not be considering this. So let us move on to solve the problem. So computation of assessable value, particulars, foreign currency, Indian currency. So cost of machine. So what is the cost of machine? It is 30,000 pounds. So 30,000 pounds into 100 rupees per pound. How much you will get? You will get 30 lakhs. How much you will get? 30 lakhs. Next, add packing charges 1,500 into 100. How much you will get? You will get 1,50,000. Next, technical charges 1,000 into 100. You will get 1 lakh. Next, commission 1,200 into 100. You will get 1,20,000. So only those three expenditures we have. So total the value, you will get the total of 33,70,000. So how much you will get? 33,70,000. That 3370 is called what? FOB value. So for FOB value, add transportation charges. See, transportation charges is not given in the problem. So if it is not given in the problem, what we are supposed to do? We are supposed to take 20% of FOB value as transportation charges. So FOB value is 33,70,000 into 20%. How much you will get? You will get 6,74,000. Next, insurance value. Insurance value is given in the problem, right? You can see here insurance value is given 800 pounds. So we'll be considering the given value 800 pounds into 100. You will get 80,000. So now add these two items. Add these two items with 3370. You will get 41,24,000. How much you will get? You will get 41,24,000. That is called accessible value. So what is that called? Accessible value. So now compute the customs duty payable. So what is the format to find out the customs duty payable? Particulates, amount, that's it. Only two columns. Particulates, amount. So basic customs duty, we are supposed to compute 10%. So on what we are supposed to compute? We are supposed to compute the basic custom duty on accessible value. So what is the accessible value? 41,24,000 into 10%. You will get 4,12,400. Next, social and welfare surcharge. Social and welfare surcharge 10% constant. So on what we are supposed to compute? We are supposed to compute on this value. Right? We are supposed to compute on the basic custom duty. So 4,12,400 into 10%. You will get 41,240. Next, IGST. So to compute IGST, what are the components you are supposed to consider? You are supposed to consider accessible value plus basic custom duty plus social welfare surcharge. If you add these three items, you will get 45,77,640. 45,77,640 into 18%. So what is the GST applicable? 18%. So compute 18%. You will get 8,23,975 rupees. Next, anti-dumping duty, it is at the rate of 20%. You are supposed to compute the anti-dumping duty on the accessible value. So what is the accessible value in this problem? 41,24,000 into 20%. You will get 8,24,800. Now total the outer column, you will get 21,02,415. So what is that called? Customs duty payable. So on the item what you are purchasing from other country, the item what you are purchasing from other country, on that item you are supposed to pay 21,02,415 rupees of customs duty, that is the tax amount. So then only the tax authority will allow you to take your item to your respective factory or to the business place. So this is how you are supposed to compute the customs duty payable. So moving on to the next problem. Problem number 2, from the following information, compute accessible value and customs duty payable. Point number 1, cost of machine $45,000, design and development charges $2,000, packing charges $1,500, technical charges $1,000, transportation from port to factory, this is we are not supposed to consider. Next, insurance from port to factory, this also we are not supposed to consider because it's happening in India. Next, basic custom duty 10%, compensation 20%, IGST 18% and exchange rate is 74 rupees. Exchange rate 74 rupees. So computation of accessible value. So $1 equals 74 rupees. So what is the cost of the machine in the problem? Cost of the machine is $45,000. So into rupees 74 per dollar. How much you will get? You will get 33,30,000. You will get 33,30,000. 20,000. Next, add. So add packing charges, technical charges, and design and development charges. These three items, you'll get the total. So add those items of foreign currency converted into Indian rupees. Then total here, the Indian rupee column, you'll get 36,63,000. That value is called what? FOB value, free on board value. So for that value, add transportation cost. So transportation cost is not given in the problem. What you are supposed to do now? You are supposed to add 20% of FOB value, 20% of FOB value as transportation cost. So if you compute 20% on this 36,63,000, you will get 7,32,600. 7,32,600. So next, insurance value. Insurance value is also not given in the problem, right? So what you are supposed to do now? You are supposed to add 1.125% of FOB value as insurance charges. 36,63,000 into 1.125%. So how much you'll get? You'll get 41,209. That is the insurance value. So now add these two items with FOB value. You'll get the total of 44,36,809. That is called assessable value. So moving to compute the custom duty payable. So what is the basic custom duty? 10% on assessable value of 44,36,809. So you will get 4,43,680. Next, social and welfare surcharge. Yes, it is not given in the problem. Social and welfare surcharge is not given in the problem, but still it is compulsory that you are supposed to compute the social and welfare surcharge even though it is not given in the problem. So 10% on basic custom duty, that is 4,43,680 into 10%, you will get 44,368. Next, IGST. You are supposed to compute the IGST on assessable value, basic custom duty and social welfare surcharge. On these three, 18%. The total of three comes to 49,24,857. Into 18%, you will get 8,86,474. Next, compensation cess. Again, you are supposed to compute the compensation cess on assessable value into 20%. You will get 8,87,362. So now total this taxes. You will get the grand total of 22,61,884 rupees. That is called customs duty payable. So on whatever the item you are purchasing, on that item you are supposed to pay the tax of 22,61,884. See, you can see the difference. See here in this problem, the assessable value, the total assessable value is 44,36,809. So what is the tax payable on this value? The tax payable on that value is almost 22,61,884. It's almost 50% of the assessable value. So on importing products, we will be imposing more tax. On importing products, we will be imposing more tax. Why we are imposing more tax? In order to give security to our domestic industries. So moving for the next problem, from the following information, compute assessable value, and we are also supposed to compute the custom duty payable. So cost of machine $20,000. Next, packing charges $1,000, technical fees $1,500, material supplied by the importer 1,20,000, transportation charges $2,100, basic custom duty 10%, safeguard duty 20%, social welfare surcharge 10%, and IGST 18%, exchange rate ₹70 per dollar. So moving further to compute the problem, computation of assessable value, $1 equals 70 rupees. So cost of machine. So what is the cost of machine in foreign currency? $20,000 into 70 rupees, we will get 14 lakhs, right? Next, add packing charges, technical fees and materials supplied by importer. So if you add these three items, you'll get some total. So the total is called FOB value. So what is the total? 16,95,000. For that, add transportation charges. Yes, transportation charges is given in the problem. So what is the transportation charges here? $2,100. That is the transportation charges. So $2,100 into 70, you will get 1,47,000. Next, insurance value. So insurance value is not given in the problem. You can see here, insurance value is not given in the problem. So what we are supposed to do now? We are supposed to take 1.125% of FOB value as insurance value. So if you compute 1.125% on 16,95,000, you will get 19,068 rupees. So add these two values, 19,068 rupees and 1,47,000 to FOB value. You will get the total of 18,61,068 rupees. That value is called what? Assessable value. So that value is called assessable value. So moving further to compute the custom duty payable. So basic custom duty is taxable at the rate of 10%. So assessable value into 10%. How much you'll get? You'll get 1,86,107. Next, social and welfare surcharge is given. It is 10%. It is constant, right? Yes, it is constant. Next, 1,86,107 into 10%. You will get 18,610 rupees. Next, IGST. So IGST is supposed to compute with the components of assessable value. Next, basic custom duty and social welfare surcharge. Together, it comes to rupees 20,65,785 into 18%. You will get the value of 3,71,849. Next, safeguard duty on assessable value you are supposed to consider. So assessable value, so 18,61,068 rupees into 20%, you will get 3,72,214. So if you total the amount column, you will get 9,48,772. So what is this value is called? This value is called customs duty payable. So this is how you are supposed to compute the custom duty payable. So I hope all of you understood how to solve the problems on computation of assessable value and the problems on computation of customs duty payable. So we'll meet in the upcoming sessions. Until then, thank you all.